Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Surbi Upadhyay and Pavitra Parekh, and there is a recovery underway for our own market. The Nifty is now inching once again towards the 17,600 mark, still in the red for the benchmark indices. The Nifty is down 60 points, while the sensex is down to 26 points. By the way, on your screen you can see the Parliament's budget session will be beginning today. The session will start with a joint address to the two houses of the Parliament by the President Draupadi Murmu, followed by a table of the Economic Survey 2023 by the Union Finance Minister Nirmala Sitharaman that is expected to be tabled at 12 p.m. So today, the Parliament's budget session will be beginning. We are awaiting this. On your screen is currently the President's address to the joint session. Let's listen in.
अमृतकाल के ये 25 वर्ष का कालखंड स्वतंत्रता की स्वर्णिम शताब्दी का और विकसित भारत के निर्माण का कालखंड है। ये 25 वर्ष हम सब के लिए और देश के प्रत्येक नागरिक के लिए कर्तव्य की पराकाष्ठा करके दिखाने के ये हमारे सामने युग निर्माण का अवसर है और हमें इस अवसर के लिए 100% सामर्थ्य के साथ हर क्षण कार्य करना है। हमें 2047 तक ऐसे राष्ट्र का निर्माण करना है जो अतीत के गौरव से जुड़ा हो और जिसमें आधुनिकता का हर स्वर्णिम अध्याय हो। हमें ऐसा भारत बनाना है जो आत्मनिर्भर हो, और जो अपने मानवीय दायित्वों का पूरा करने के लिए भी समर्थ हो। ऐसा भारत हो जिसमें गरीबी ना हो, जिसका मध्यम वर्ग भी वैभव से युक्त हो। ऐसा भारत हो जिसकी युवा शक्ति और नारी शक्ति समाज और राष्ट्र को दिशा देने के लिए सबसे आगे खड़े हो, जिसके युवा समय से 2 कदम आगे चलते हो। ऐसा भारत जिसकी विविधता और अधिक उज्जवल हो, जिसकी एकता और अधिक अटल हो। दो 2047 में देश जब इस सच्चाई को जीवंत करेगा तो निश्चित रूप से उस भव्य निर्माण की नींव का अवलोकन और आकलन भी करेगा। तो आज़ादी के अमृतकाल की इस प्रथम बेला को एक अलग आस्था के साथ देखा जाएगा। इसीलिए आज अमृतकाल का ये समय, ये कालखंड बहुत महत्वपूर्ण हो गया है। माननीय सदस्यगण, मेरी सरकार को देश के लोगों ने जो पहली बार सेवा का अवसर दिया तो सबका साथ सबका विकास के मंत्र से हमने शुरुआत की थी। समय के साथ इसमें सबका विकास, सबका विश्वास और सबका प्रयास भी जुड़ा गया है। यही मंत्र आज विकसित भारत के निर्माण की प्रेरणा बन चुका है। विकास के ये कर्तव्य पथ पर चलते हुए मेरी सरकार को कुछ ही महीने में 9 वर्ष पूरी हो जाएगी। मेरी सरकार के लगभग 9 वर्षों में भारत के लोगों ने अनेक सकारात्मक परिवर्तन पहली बार देखे हैं। सबसे बड़ा परिवर्तन ये हुआ है कि आज हर भारतीय का आत्मविश्वास शीर्ष पर है और दुनिया का भारत को देखने का नजरिया बदला है। जो भारत को भी अपनी अधिकांश समस्याओं के समाधान के लिए दूसरों पर निर्भर था, वही आज दुनिया की समस्याओं के समाधान का माध्यम बन रहा है। जिन मूल सुविधाओं के लिए देश की एक बड़ी आबादी ने दशकों को तक इंतजार किया, वे इन वर्षों में उसे मिली है। जिस आधुनिक इंफ्रास्ट्रक्चर की हम कभी कामना करते थे, और इन वर्षों में देश में बनना शुरू हुआ है। आज भारत में ऐसा डिजिटल नेटवर्क तैयार हुआ है जिससे विकसित दिशा में देशों में प्रेरणा ले रही है। बड़े बड़े घोटालों, सरकारी योजनाओं में भ्रष्टाचार की जिन समस्याओं से देश मुक्ति चाहता था, वो मुक्ति अब देश को मिल रही है। पॉलिसी पैरालिसिस।
Well, that is the president outlining some of the key highlights and the achievements of the Modi government over the last 9-year tenure. And of course, talking about some of the major pillars of government policy, including Atmanirbharta, the unified, diversified the economic policy, and looking at a stronger economy as well as equality across the economic strata. Well, with that, we have to quickly get to the market and also to our first corporate interview of the day. The market, by the way, is still sort of nursing some losses, down about 80 odd points. So it is flip-flopping around that the flat line, but the pressure is on. As you can see, we've again begun a bit of a decline. The bank Nifty has turned negative as well. So we've got an eye on that. Mid-caps are doing much better. For a change today, the mid-cap index is actually holding out in positive territory. So that's the shape of the market. With that, let's actually get to our first corporate conversation on the show. Welspun India delivered a mixed bag in the third quarter. The revenue is actually down about 23% versus last year, and it's down 11% if you compare it to the last quarter. Demand worries continue, but the company has clocked an overall improvement in margins on a quarter-on-quarter or a sequential basis. Dipali Goenka, Chief Executive Officer and Joint Managing Director at Welspun India, joins in to give us some more color on the business. Dipali, great to have you with us. Thanks for joining in. So, I mean, if I only look at the headline numbers, and obviously there is pressure right from the top line itself, but you tell us, I think the reduction in input costs, that at least has helped your margin sequentially. But before we talk margins, let's talk headline. The revenue picture itself. How do you see the last quarter of the year and more importantly, the beginning of next fiscal shaping up for you?
So I think, let me just give you a perspective. Definitely, the commodities have come down and they softened. The cotton prices last quarter were 83,000. Right, this quarter was 69. Going further, they'll soften further. The freight costs have considerably come down. So commodities are holding strong. However, our energy basket still continues to be a little bit dynamic. That is, again, a kind of an aberration there. And it's, again, a question of revenues. I must share that the wallet share is going to experience in travel for the consumer more so, that the home textile has dropped considerably from the wallet share by 20%. So it is, again, a question of the top line that we look at. But I think if I look at Welspun India, and definitely you spoke about the exports, but let's not forget our emerging businesses that have come to fore. So they are contributing around 19% to our whole top line, which is advanced textile, flooring, and our domestic consumer business. Our domestic consumer business grew, and we all know that India is the bright spot, with the kind of a growth, GDP growth of around 6.7%. So looking at all that, when I talk about the top line and then when I talk about the mix, which is going to be going forward, Welspun, if I talk about the US markets, Martha and Scott, which are our licensed brands, they increased our shelf space by 175%. And now our Disney license in UK and Europe is going to give us more avenues of growth in those doors. So overarchingly, our product portfolio basket, towel, sheets, rugs, utility bedding, and our licensed brands will hold strong for the next year as well. Our emerging businesses will continue to grow, and our domestic retail business, owing to our Indian global position that we have, is going to stay strong. So Welspun and Spaces are going to be at 4. Welspun has grown by 50% and is the highest distributed brand in the country today.
Hi, Rima here. But just to talk a little bit more on your top line, revenue's down 23% year on year. Quarter on quarter, it's down 12%. Has the revenue bottomed out? Should we expect an improvement in Q4, led by the factors that you outlined, increasing shelf space, the Disney contribution, etc.? Give us an indication of the top line in Q4 as well as H1 of FY24.
So, I think we all know that as COVID struck us, the logistics was a nightmare. The retailers received their goods, a couple of quarters late. Even the holiday season didn't get the goods that they needed. Today as well, we see that, there's a glut of inventory. So while you're talking about the top line, it is going to be staggered. So while as the inventory clears up at the point of sale, there might be a peak of kind of a demand that might come from certain retailers. And again, a trough, because then the inventory tends to mobilize. I think that it's on the back of the footfalls that will get restored. And we feel that the latter half of the next year, half one, is where the footfalls will start getting restored. And then we'll see the top line coming to where we want it to be.
And where is it that you want the top line to be in H2 of FY24?
No, we are $1 billion in revenue, and we continue to hold that strong. And we have that vision of going towards $2 billion as WIL in 2026. So owing to that, we will be where we want to be.
All right. Hi, Dipali. Morning. This is Pavitra. Just a little bit on your capex. I think in the first 9 months of this year, you've spent around 240 crores on capex. So can you tell us, at a time when demand is perhaps, not looking so steady, do you think that you are going to scale back on capex, or perhaps not expand as much? Or do you think that plan is still in place, continuing into FY24 as well? And on that same note, what is the store addition plan like?
So, let me tell you one thing. We have done a capex. We're all behind it now. But flooring has done the capex of around 1,300 crores. You've had your advanced textile, the new the machine and factory in Hyderabad. All has been done. So the 240 crores is the last lag. The only thing I must add on, now we're investing in green energy. That is around 200 crores, and it will be operational by Q1 2024. So that is the only thing that we have going forward. And that is all to mitigate risk and to grow our business, sustainably. And also to share that our debt is considerably down, and we will see that home textile, the core business, debt coming down to zero by next year. And definitely that's where we are today.
Okay, got that, Dipali. We look forward to a longer chat, perhaps once the budget and the earnings season in the thick of the news season abates. Then we'll get into more details. But thank you for all the highlights from the results today. That's well spun. India for you. Stocks holding up about 1%. Need to take a quick break. On the other side, commodities with Manisha.
We're still tuned into trading. The market is around 60 points in the red right now. The banks have once again moved into the green, but it's just a minor green tick that we're seeing. Around 40 points higher on the banks, but they did also move lower just a few minutes ago. It is a mid-cap index where you're seeing a bulk of the strength come through, and it is led by a lot of the earnings reactions which are coming through. So we will talk more about that, but for now, let's talk about the commodities. Manisha joins us, and today she's going to tell us about the energy space. Hi, Manisha.
Hi, Pavitra. Thank you for that. Well, this is one sector which has continued to decline. Yesterday was a weak day, and today as well, especially with the strength in US dollar and ahead of the US FOMC meeting, we have seen some pressure come in for the energy sector. So the crude oil prices have seen a decline, and we've seen 2% down already in this week. There's enough and more availability coming in from Russia. The month of January saw 50% of a jump up when you look at loading numbers. And for the Feb as well, the numbers from China, India and rest of the Asia do look positive when you talk about the Russian imports, and that clearly seems to be weighing onto the prices here. Having said that, we still are trading above $80 a barrel as markets are looking at some geopolitical concerns, especially arising after Israel and Iran. But when you look at the other energy products, coal has seen a very sharp decline as well. That one is trading at a 6-month lows right now, and we've seen it break below $300 per ton. US natural gas prices have declined by nearly 25% for the month of Jan alone, and here as well we are trading at a 21-month lows. So when you look at the weekly chart itself, the crude oil prices are down by 3%, heating oil is down 8%, natural gas 12% down in the previous week, and the coal price is down 26% as well. So everything in energy at this point in time under pressure.
Okay, thank you very much, Manisha, for joining in. Let's invite the second corporate on trading hour today. As we told you, it's a power-packed show. We've got IFL Finance on our radar on the back of its Q3 numbers. The company has seen strong business momentum with an improvement in the asset quality. To discuss the quarter gone by and the way forward, we're joined by Kapish Jain, the CFO, to take some questions for us. Mr. Jain, morning, and thanks so much for joining in. First, the big question, right? What's the loan growth going to look like going ahead? What's the guidance that you could share with us? We've seen an improvement in asset quality. Can it sustain? And interest rates are rising. So your thoughts on NIMs and the ability to protect it?
Yeah, thank you very much for having me here. So for us, the key is consistency. If you look into the trajectory of the last 5 years, we have seen all. We have seen COVID, we've seen the crisis coming with regard to liquidity as well. But we have been able to maintain a CAGR growth of 25% in these 5 years. Going forward, we believe we'll be able to maintain that and make sure that we are consistent on our delivery and performance. So that's one point with regard to the loan growth. With regard to interest rates that you mentioned, yes, the interest rates have actually moved up. And we've seen that hike happening both from the repo side and from MCLRs. For the change that has happened till date, we've been able to pass it on to our borrowers. And more particularly and importantly, we've also been able to rationalize our own cost of borrowing. So while the market has moved up from around 250 basis point on the repo to 100 basis point on the MCLR of the bank, we have been largely in line with our borrowing. So our borrowing costs have maybe moved up by around 15-20 basis point overall because of the active management that we do on the borrowing side. On the NIM, given that we have been able to pass on our rates hikes to our borrowers, we believe we'll be able to sustain the NIMs that we have given to the market till date, and we should be able to manage and protect it.
And asset quality?
On the asset quality side, on the asset quality side, yes, across board, we have seen markets improving. We have seen more particularly the credit cycle is showing better signs. There's a lot of activity happening on the market resulting in recovery showing better signs as well. So from an active management on that front as well, we should be able to get our asset quality in line to what we have given into the market. We've seen improvement this quarter, and we believe we should be able to keep ourselves on a gross NPA of near around 2% and a net NPA of near around 1%.
Okay. Kapish, hi, Surabhi here. I just want to get into the breakup of the business, the breakup of the book itself. Home loan, which is obviously the lion's share for you, it's the big chunk. There, quarter on quarter, there's a dip in disbursals. Is that just sort of, the usual seasonality kicking in? Or is that a conscious decision right now? Is there a change because of rising rates? If you could just give us some more details on home loans first.
Yeah, so on the home loan front, there have been some change in our approach and strategy. If you see, while the overall disbursement numbers might show a little marginally lower number, but we have done more disbursements. Our average ticket size have come down. A number of units that we have financed has gone up by around 10%. So the overall action and the activities in terms of volume has been there. And this quarter, of course, was little muted on the overall number more because of the holiday season which came in the last quarter. But then we don't see any dip coming in the disbursement numbers with this transition happening on lower ticket size and lower unit size as well. We should be able to get to the momentum of disbursements going forward as well.
Okay, just one more point on the sectoral breakup. You seem to be going very aggressive and very strong on the MFI sector. I mean, that part of the book, it's still small. MFI is about 7,800 odd crores. But the growth, if I look at disbursals year on year or quarter on quarter, the growth in that book seems to be very, very strong. So again, this is by design. Where do you intend to take this up to?
So if you look into the guidance which has been given, if you look into the last 5 years, this business has really not moved anywhere. More particularly for the NBFC space, the numbers are at AUM level for NBFCs are same what they were in year 18 and 19. We've seen COVID and we have seen some of the floods which happened in few of states and some of the other interventions which came in resulting in this sector not growing. So there's a lot of pent up demand which is there, which is coming in now. And even the forecast that comes in from external agencies, they suggest that the growth should be in the range of around 25-30%. We think we are well placed. We have done expansions of our branches and our distribution is fairly strong there. And we are trying to just monitor and monetize and tap that particular built up that we have done on the infrastructure side, which is causing this growth. So if you look into a 5-year cycle, this growth has been a little muted. But if you just look into the recent cycle, you'll see that the growth is a little fast. On the regulatory side, there have been a lot of positive development which is causing this growth to come in. The regulator has given up the embargo on a price cap which was there at 10% of your cost of borrowing, realizing the fact that this market has to be priced with regard to the risk that you take on the book. That is enabling you to better price these assets. There is some limitation which has been removed on the household income to which you can give this loans to. You can also manage this business better by doing more of secured lending, which was earlier capped to lower. It's now moved up to 25%. With these kinds of positive development coming from the regulator as well, is enabling this market to go with a better risk-reward pricing, which is causing the growth to come in. And we believe that there's a good cycle of growth coming in. The more particular thing which we'll always be very particular about is to make sure that we are managing asset quality fine and we are having a good tap on our early delinquencies and our PAR numbers.
Okay, Kapish, since we're talking about the different segments of the book, on the gold financing, that's also seen a good growth, compared to last year, it's up around 25%. But can you tell us why the disbursal to AUM ratio is so low? I think it's come in at just around 6%. So can you tell us what's happening on that front?
So I'll tell you, I'll come back to the first question. The gold business is again a hugely untapped market. On a big picture understanding, we'll realize that 65% of the market is still going towards the unorganized segment. The key here would be to make sure that you are present in the local geography, you have expansion, and you are clearly approachable to the local catchment to the market. We have expanded a lot. We have added close to around 500-600 branches in the last 6 to 9 months, which is enabling this disbursement growth to come in for us. On the AUM too, I'm missing that number that you're talking about on disbursement to AUM. But from a core sector perspective, it's a prominent segment for us. And with right pricing, we think we'll be able to sustain the growth that we have today. Some of the expansion in housing and microfinance would have taken this lower number, but I don't believe there's too much of shift happening in the overall share of the AUM for gold business. Okay, just quite last single word question, Kapish. Given everything that you explained on MFI, let's say over FY24, what percentage of your book will be MFI? So currently MFI as a percentage of my book is around 10-12%. We would believe that we'll be keeping us on a similar range. It's at a lower base, so therefore the growth is looking a little higher. But the overall share of this business would be at around 12-13% range and shouldn't be higher than this, even for 24-25. Okay, we'll leave it to that. Kapish, thank you very much for joining in. That's IFL Finance for you. By the way, look at the recovery in the broader markets. The mid-cap index is up 1.3%. The small-cap index, the Nifty small-cap index is up close to about 1.8%. And some of these other Adani Group stocks, right? Adani Transmission now has turned back into the green. It's up close to about 0.1%. The advanced decline ratio after 3 days of heavy selling is now in favor of the gaining side. 2,000 stocks in the green for about 700 stocks in the red. The gap between the two is also widening. Slip into a break. On the other side, we'll come back and discuss market technicals. Mitesh Thakkar. With us on Trading Hour, time to talk markets and get some bets going. Mitesh Thakkar of earningswave.com is with us for exactly that. Mitesh, good morning. Thanks for joining in. So it's a little all over the place today. A fair amount of volatility in a narrow range. How are you playing it? What bets would you go with?
So, one, I think the market was expected to be choppy given the fact that we are running into an event and we have had a big decline. So some short covering and some, bounce back was expected. I think it's playing out nicely. And I think on the upside, there is space till about 17,800. I think that's the level, which we can see possibly being tested. But unless I think that is being crossed, we'll not be aggressively long on the markets. But yeah, trading with stock-specific biases. And in fact, I have 2 buy calls right now. A lot of stocks are reversing from oversold levels. So fertilizers and chemicals are also there. And Deepak Nitrate is something which has given a good turnaround on the hourly and the 2-hourly charts. So that's a buy with the stop below 1860. Targets of around 1920 can be looked at. And the other one which I like has been a stock which has been outperforming, it's been consolidating. And now on the verge of a breakout is Bharat Forge. I would want to see the stock get past 885, 887 zone. So buy about that. Keep a stop at 874 and 920 should be the target here.
Okay, thank you very much for that. As we slip into a break, it's time for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every single day. We gave you the question at 9:14 a.m. today, but just in case you missed it, here is today's question. What was the fiscal deficit to GDP for FY22 revised in the last budget? Your options are A, 6.6%, B, 6.7%, C, 6.8%, D, 6.9%. Send us your answers on Twitter. Post your answer as a comment on the question tweet on the handle CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Hurry and send us your answers. We will announce the winner at 3. Welcome back. Now, Tech Mahindra is the top Nifty loser today. It's down close to about 3% now. One of the reasons is the miss on the top line. The company reported a revenue growth of just 0.2% in constant currency terms quarter on quarter. lower than estimates, and compare it to peers, and you would see that it's right at the bottom of the pyramid. Peers like Infosys, TCS had a revenue growth of more than 2.5%. HCL Tech was closer to 5%. So Tech Mahindra's top line missed expectations, partly because some of their big clients squeezed their budgets, furloughs, and the commentary in the call was also fairly cautious. So the stock is under pressure, right? This is the comparison versus peers, and we pull up the comparison versus estimates. We'll pull up the comparison versus peers as well. But here I want to present a contra view, which is coming in from Ambit, and they're saying that Tech Mahindra is a tactical play on margin recovery. Now, Tech Mahindra's margins at 12% is sharply lower than what it was a couple of quarters ago and much lower than peers like Infi TCS, whose margins are above 20%. So Tech Mahindra's margins are much, much weaker than peers. So Ambit believes that this is a tactical play on margin recovery. And they also say that valuations are reasonable. It's trading at a 30 to 40% discount to larger peers at about 16.5 times forward multiple. The scope for margin improvement is: 1, the utilization level is still below peak levels by 300 basis points. Its subcontracting cost is about 14.4%. The reason their subcontracting cost was high because the company's attrition was high. Now that attrition is cooling down, they have to rely less on third-party people that they hire just to complete the job on site. These subcontracting costs were very high for Tech Mahindra, higher than peers, and they believe this number could come down. They also have a lower offshore revenue mix. Offshore basically means work that can be done in India. If they increase the work that can be done in India, it is positive for margins because the costs in India are lower versus, say, a US or Europe. And third, under-leveraged employee pyramidization, which basically means you hire more at the bottom end, the fresher. And they also say that in the past, when Tech Mahindra's margins came under severe pressure, they're going back a couple of years, the company was very aggressive on cost rationalization, optimization, employee salaries were cut or they didn't give wage hikes to boost their margins. So they say even that is a possibility, that the company, to spruce up margins from current levels, could be very aggressive on cost optimization. Also on the top line, Ambit is saying that whenever there is a big transition in the communication tech, we're moving from 4G to 5G, there is a lot of work which needs to be done on networks. So in the past, whenever we've had these communication transitions, Tech Mahindra's revenues have actually done very well. And also, final point, they're saying the current consensus expectations is only baking in about a 5 to 7% revenue growth, which they're saying is adequately factoring in any kind of demand moderation, because they are already saying that consensus is expecting a pretty poor performance from Tech Mahindra. There you have 5% growth for FY24 and just 7% for FY25. So Ambit has this contra call coming in on Tech Mahindra.
Okay, that's an interesting one, a bit of an outlier call. Stock still under pressure. By the way, 20% Adani Enterprises, so gradually inching higher. Today is the last day. Let's see, still several hours to go. But 20% is the total subscription to that FPO, at least as of now. Interesting move on a couple of power stocks. Big flip up in the likes of Power Grid and NTPC. Maybe this is finally a little bit of the budget excitement, the pre-budget rally, so to speak, that is playing out. It's been completely elusive throughout the month of January. But some of these stocks, the PSUs from the power space, they are looking a little excited. Quick break on that note. On the other side, we will be joined by the management of Mazgaon Dock. We'll talk about their numbers. It's been a great quarter. The stock's been doing very well. We'll get chatting with Sun.
Still tuned into Trading Hour. We are in the thick of the earnings season, so let's get another corporate conversation going. Mazgaon Dock is on our radar on the back of its earnings. It was a good set, and the company's clocked in a revenue growth of 17%, and they've also seen the best gross margins come through in nearly 3 years. By the way, the stock has been on a tear. I mean, for this month, it's absolutely flat. Today, it's up 4%. But if you take a look at the one-year chart of this stock, you'll see it's up 190% over the past 1 year. So to discuss the quarter gone by, as well as the outlook, we're now joined by Mr. Sanjeev Singhal, who's Director of Finance at Mazgaon Dock. Mr. Singhal, thank you very much for joining us. This is Pavitra. If I can begin by asking you about your revenues, you've seen good growth come through, and you earlier guided that full year revenues, that is for FY23, will be 7,400 to 7,500. But in the 9 months already, you've already done over 5,750 crores, to be precise. So can you tell us, is there any plan to revise this? Do you think you can do more than what you guided for earlier? Because I do know that you have some submarine deliveries to the government also, which are due.
Good morning, everybody. As far as the revenue guidance is concerned, in fact, if you remember, we had already revised our revenue guidance post Q2. In Q1, the revenue guidance was around 15%, which we had revised to 25 to 30% in Q2. We continue to maintain a similar kind of a guidance, 7,400 to 7,500. And this has been mentioned by me earlier also in my discussions with the same channel, that as far as this industry is concerned, we should not be reading too much on a quarter-to-quarter performance. These are very large infrastructure projects which have a very long gestation period and long life, more than 6 to 8 years. So on a quarter-to-quarter basis, any spikes or any variations in the performance should not, a significant meaning need not be attributed. We continue to have a guidance that we should be close to 7,500 as far as FY 22-23 is concerned.
Mr. Singhal, so just to map the future of Mazgaon Dock Shipbuilder, can you give us an indication of the kind of deliveries that are planned, how many in the next quarter, thereafter, just the future triggers for the company, how many orders in the pipeline, your conversations that are going on?
If you recall, as far as FY 22-23 is concerned, this has been a very brilliant year all along. Considering the last calendar year, we have had 4 launches and 1 keel laying and 2 deliveries. As far as the plans are concerned, in Q4, we don't plan any delivery. But coming to the next financial year, 23-24, definitely one destroyer is definitely planned sometime end of second quarter or maybe early third quarter. And we are also targeting the delivery of the last of the submarines, maybe in the fourth quarter of 23-24. Apart from this, we are targeting certain orders which may materialize maybe next year or a bit longer. That is with respect to P75I. There are discussions with respect to additional submarines also. And with respect to the next generation destroyer also, we feel some kind of a firming up with respect to the requirement and with respect to AON that may be happening anytime next financial year.
Okay, so just to get the timeline straight, the 6th submarine you said probably will be delivered in the 4th quarter of the next fiscal, but there's a destroyer that's lined up for delivery earlier. Can you give us some estimate, first half, second half?
We are expecting first half. In case there is a spillover, it may go to the third quarter.
Okay, got that. You're also booking some revenue, looking to book some revenue with the dry docking, ship repairs, etc. of some merchant vessels, is it not, Mr. Singhal? Some sense of, the revenue recognition that you might see there on the merchant side?
As far as merchant vessels are concerned or repair and refits are concerned, this constitutes a small pie, not much of a area of focus. Yes, as far as the repairs of submarines is concerned, that is medium refit and life certification, we are already in advanced stages of discussion for the second submarine. First MRLC, medium refit and life certification of the submarine is likely to be concluded within 23. And within 23, rather early part of 23, we are expecting an order for the second refit and life certification of a submarine.
That's interesting. So in terms of revenue, repairs, whether it's merchant vessels or defense vessels, how much would that contribute? I know it's a much smaller portion of the overall revenue, but how much would that contribute? Just to understand the revenue pie, let's say in FY24.
As far as FY24 is concerned, we are expecting a revenue contribution of around close to 5% from the repair and refits business.
All right, got that. So that is on the ship repairing parts. And can you also tell us, about okay, fine. I'll ask you about the budget first because we do have that tomorrow. Since you do get most of your orders from the Ministry of Government, from the Ministry of Defence right now, all of them precisely. So can you tell us what are your expectations ahead of the budget right now, to get a broader sense?
There should be a enhanced defense allocation, and that should help everybody, including the players who are into the business like ship repairs and shipbuilding, like MDA.
So just to get into numbers, what was the budget allocation or what was the total spend by the government which catered to defense and ships where you play in last year, and what could the number look like this time, the growth?
This I would not speculate as far as what would the numbers look like. Last year it was 73,000 crores as far as the defense budget is concerned. And whatever allocations were there with respect to MDL, close to 10,000 crores, we have been able to almost, we expect by 31st of March, we will be close to that number.
Rima, I can just add one snippet, which I was reading a lot of sort of the economic reports ahead of the budget. So typically what history tells us that in the penultimate year to general elections, defense spending goes down and the spending on health, infrastructure, education, it picks up, right? That's what people want to see, and that's what budgets typically in the penultimate year to general elections have done. Whether this year is any different or not, well, we'll have the answers tomorrow. But Mr. Singhal, just to quickly come back to business, margins have been stellar this quarter. I mean, you've gone all the way up to 16%, and our research team tells us that at a gross margin level, I think it's 50%. That's the highest in multiple years for Mazagon Dock. Is this sustainable?
Yeah, no, I would say that as far as the margins are concerned, our margins on nomination orders are pegged. In case there are certain savings on the fixed cost portion, they reflect in a better margin. As far as quarter 3 is concerned, quarter 3 we had a delivery, and at the time of delivery, the complete stock of the position is taken. So these are not, I would not project them to be a normal margin, and these are not likely to continue on a quarter-to-quarter basis. This is on account of a delivery when a slightly higher profit has been booked. These would normalize, and we should be posting reasonably good margins, but not of this magnitude or order.
What is that sustainable level, the realistic, sustainable, good level, as you call it?
Yeah.
12%, 11%?
Our margins on the orders are pegged at 7.5% to 8%. There could be some additions on account of cost savings and efficiencies.
Okay, all right, Mr. Singhal, got that. Thank you very much for joining in and giving us a lot of the details on the business. That's Mazagon Dock. The stock has done, of course, exceptionally well. It's one of the most phenomenal movers over the last 1 year. High was closer to 900, I think 914, 915. It's 100 rupees off that, but yeah, there we go. It's one of those high-flying stars of 2022.
Almost 200%, right?
Okay, we'll take a quick break on that note. On the other side, we'll get you more on the markets. But before we do that, here's some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, credible, powerful IBLA jury on the 8th of February right here on CNBC-TV18.